just done something for only the third time in the last 2.5 years. And what it means now will send the baby bears back home crying to their mommies with their tails tucked between their legs. In a shocking twist that will leave the Moon Boys covered in their own filth. And I promise that after you watch this video, you will be happier and more euphoric than your sister on a Friday night after a few drinks and a Slurpee Doodah from the local football team. Right now, Bitcoin is doing something magical along with the stock market, and there are multiple things on multiple charts and multiple fundamentally, absolutely very promising things that we're going to be taking a look into of why this is happening with Bitcoin. And if it is true at the beginning, potentially with only 60 days left, roughly, until Santa Claus visits everyone's home and gives them a gift that they could never forget, is Santa Claus about to leave us a little sweet treat under that tree that surely will leave all the Moon Boys much, much happier than ever imaginable? So you make sure to like, subscribe, to miss these absolute time-sensitive alerts. And without any further ado, let's jump in to this video. Absolutely gargantuan. So here's what's going on here. With Bitcoin, on this chart, you can see that we have just gotten a MACD cross on this momentum indicator that we have not gotten in a very long time. And the last time that we got this was back in September of 2021, so over a year ago, and it was as Bitcoin was going up to 69,000 US dollars per Bitcoin. So that's pretty big, right? I think most people would say that's not a small thing, that's a pretty big thing. And what's even nuttier than a bag of peanuts themselves is that Bitcoin, the last time I got it before that was back in May of 2020, which, as we all know, I remember that day as we were sitting there, those few weeks, I remember sitting there thinking, wow, this is really it. No more flipping burgers for me. This is where I let the juice loose. And, funny enough, over those next few months, the juice was, it's an understatement to say that the juice was loose. It was very loose. The juice was completely unleashed. And Bitcoin went up to the $60,000 range. And that was magical, right? And so all of that to say is that we have just gotten another one of these green flips, which we have not gotten in so long. And what's craziest about all of this is that the MACD is completely ready. As you can see, both of these moving averages are curved completely, pointing in one direction and one direction only, straight to space and beyond. And so that's very big. Okay, so over the next few weeks, it's very possible. It's very, very likely. It's becoming increasingly more and more likely. As before we even continue with any of this, I'm sure all of you know that the employment numbers helped. They basically ignited this rally because potentially these rate hikes might be doing what the Fed wants them to do. That is the whole point of this, is that the Fed has been raising rates. They're trying to slow everything down, tighten everything. And these are the first, maybe the first actual indications that it might be working. And so with everyone expecting, as the Fed has said, that tightening might slow down at the end of this year in December and going sometime into 2023, maybe we get a complete pause over these next few months. If that actually is happening, the employment numbers coming back like they did today is a good first sign of that. It's very promising. And think about this for a second. We got that news, and the markets immediately moved up. Bitcoin broke 21,000 for the first time in quite a while, and the markets reacted positively. Now imagine if we get that, like a CPI reading over the next few months. Any news, all of this is to say this market is so ready to pop, and it's just waiting. It is waiting for fundamental news. The reason it moved up a little bit today was because of those unemployment numbers. And if we continue to see anything continuing in the trend of what we saw today, that's going to continue. But if we continue here with Bitcoin, we see ourselves potentially in a absolutely gargantuan, nearly 2-year long falling wedge. And right now we're testing the absolute middle of this trend right here. Okay. Right now waiting to break above it, which is also coincidentally or not exactly where the 21-week moving average is right here. Okay. So that is a big thing. Not to mention, we've been talking about for weeks this RSI bottoming right here. We see the momentum on the MACD on the weekly chart also going up. And realistically, all pressure is to the upside, okay? This market, as you can see right here, look at this whole area. We just circle it. For the past 6 months, basically, 5 or 6 months, Bitcoin has been squished in the same range. and it's not pressure to the downside. Could we still go to 10K? Absolutely. Anything could happen. The war could get worse. There's a million factors that you cannot predict by looking at a chart, obviously. However, if you look at the chart and you look at where the pressure is on this chart, it is very clear where it's at. For pizza's sake, if I show you this chart, right? If I show you this chart, what looks like it's about to happen? What looks like it's like, what does this chart look like? It looks as though, we've gotten pushed down. We've gotten pushed down here. We've come all the way up here. Now it's about to get rejected, right? Well, this is literally just the same chart inverted. Okay. So it's just a nice way of illustrating that. This is the exact opposite of that chart. Okay. I'll do it again. You can see if you would look at this chart, you would think, wow, this looks pretty bearish. We're about to get completely rejected to the downside. All right. To the downside. Well, listen up, folks. That's actually to the upside because it's just inverted. That's a little trickaroo, a psychological trickaroo to just maybe show you the opposite side of this. The pressure, I don't really have to make a argument for that. The pressure is clearly to the upside. And take advantage of over $16,000 in trading bonuses below. In addition, for the next 50 signups, and this will only be for the next 2 days, 48 hours, the next 50 signups using my BitGet link below will receive a free 50 USDT simply by putting in an email and creating a password. And that's it. It takes 30 seconds. But let's take a look at a few things first. So big guys potentially loading up here. Smart money is confident that we're at historically high levels with the SMC indicator, which is a smart money confidence indicator, traditionally used for stocks. And this, again, could be a very good thing for risk assets because potentially it is time to receive this bounce that's long awaited here. But a few other things as well. December's FOMC meeting is currently expected to yield a 50 basis point hike, not 75. The past few months have been 75. And overwhelmingly, the rate possibilities are favoring a 50 basis point hike right here, okay, as opposed to a 75 again. And if that's true, combined with the unemployment data released today, this could end up having a very good effect on the markets. So this came in higher than expected, the unemployment numbers. And that implies that the rate hikes are actually having their desired effect and that a pivot could come sooner. Now, it doesn't look like there's any evidence of a pivot right now. But, I'm not saying there will be. I don't think it'll be this year. I think it'll be at the very earliest, a couple months into next year. But the market will start pumping and moving before that, in my opinion, as we're seeing right now. So again, it makes total sense. If we do get a pivot, there's going to be evidence that there will be a pivot months before we actually get one. And the market will start reacting months before that, right? The markets are very forward looking. And we saw some unemployment data released today, and all of a sudden the markets really wanted to go up. Now, right now, they're kind of still stagnating a little bit, kind of back to, they're still a little bit higher than they were before this data, but overall, we potentially are seeing the beginnings of what the rate hikes are supposed to do. And that's really the only important thing. And one thing that I gathered from watching the FOMC meeting and Jay Powell's speech on Wednesday was just that I really don't think they have any secret data whatsoever. They really don't know anything more than anyone else. I personally believe, just like a year ago when everyone else was saying, interest rates, they probably should start raising them, and they're doing it too late, which they ended up being like 6 months too late, even doing all of quantitative tightening, or starting the beginning of quantitative tightening. I truly don't believe they have any extra information. And so these CPI readouts, one of which we'll be getting very soon, these CPI readouts are pretty much what they're basing everything on, and I really don't think they have much knowledge. I think these FOMC meetings are getting less and less informative, really. Now, they are going to influence the markets because everyone wants to see how Jay Powell is reacting, but overall, I think that the people that have their pulse on the market the most are, ironically, people on like Twitter and people just watching the markets, like, you and me just watching the markets. As many of you know, the Fed was like late by months in trying to understand what's going on with inflation. And do you think they'll be late with understanding how their rate hikes are affecting everything? Probably also. I don't think you should have much, all of that to say is I don't think you should have much trust in the Fed, in their ability to understand what is happening. But with all of that being said as well, the SPX was up today. It did get rejected, however, off the 50-day moving average here. But now it's still holding back on this 21-day moving average. So this is all a short-term thing. We're going to the weekend trading here. What happens over these next 2 days on the weekend? honestly anyone's guess, but we did see the DXY face a major rejection. That's very key here. That is much more important than anything. You can see right off this center trend line, we got a big rejection candle, and that is when the market started pumping, about a 2% almost, 1.7% drop on the DXY. And again, the DXY overall is just looking a little bit weaker than it has over the last few months. We had a pretty long downtrend from mid-July to mid-August, okay, so about 29 days, and then it resumed its uptrend. We've been in this downtrend for about 37 days. Yeah, so actually longer. We've been in this downtrend without a bounce yet. So it's very likely, it's very possible that we're seeing the beginnings of the DXY dumping, the beginnings of the DXY topping out. And again, that is ultimately very, very bullish for risk on assets like Bitcoin. So again, this channel, make sure to like, subscribe, turn on those ghost notifications, these absolutely time-sensitive alerts. Take advantage of over $16,000 in trading bonuses below. In addition, for a limited time, over the next 48 hours, the first 50 signups using my BitGet link below get a free 50 USDT for trading below. And without any further ado, that's for me.